What's going on, guys? Welcome back to the channel. I hope you're all doing good and having an amazing day. So in today's video, we're going to be looking at premium bonds. Now, premium bonds aren't exactly new and they've actually been around for years, but they're just structured in quite a unique way. And the basic idea of how it works is that you put your money into premium bonds, sort of like a savings account. And rather than earning interest, you get entered into monthly prize draws where you can win anything from £25 to £1 million. And it's completely risk-free and you're able to withdraw the money at any point. But what's particularly interesting about them is that in recent years, a lot of people have been starting to use them sort of like a savings account due to the fact that interest rates are just so low at the moment. And it's a struggle to find anything with a decent interest rate that is risk-free. So in this video, I'm going to be going through everything that you need to know about premium bonds, exactly how they work, what sort of returns you might expect to get from them, and finally, whether or not it's a worthwhile place to put your money. Now, before we get into it, if you are new around here, welcome to the channel. This really is the place to be for all the most relevant information on UK finance. So if you're not already, make sure you hit that subscribe button down below and click that bell so you never miss a video. And I know it is a bit cheeky asking before the video's even started, but I'd really appreciate it if you guys could smash that like button, as it does really help me out with the YouTube algorithm and just allows YouTube to share these videos to more people that might find them useful or interesting. And as always, just as a quick disclaimer, this is in no way financial advice. I'm simply just outlining information and giving my honest opinions and thoughts. Always make sure to do your own research and due diligence when it comes to your finances. But with all that being said, let's get into the video. Okay, so if you haven't heard of premium bonds before, like I said, they work somewhat like a savings account, but rather than earning interest on the money that you put in, instead you get entered into a lottery every calendar month, where you can win anything from £25 to £1 million. And all the prize winnings are completely tax-free. So to get entered into the monthly lottery draws, you can deposit anything from £25 to £50,000. And every extra pound that you have in premium bonds will just increase your chances of winning. And they're distributing literally millions of pounds every single calendar month to the winners. And they say on average you'll earn the equivalent of 1% interest each year from prize money. So that'd be the equivalent of putting in £100 and getting a £1 return each year. But obviously this is just the average and it's not guaranteed. Now, one of the biggest selling points of premium bonds is that they're actually completely risk-free in a traditional sense. So you're free to withdraw the money at any time and you'll never make a loss on your money. Now, this whole concept I actually think is incredibly clever, and the business model is so simple but so effective at getting people to put their money into premium bonds. So the reason that it's so effective comes down to two main things. So something that many of us struggle with is the idea of risk. And everyone wants to make money, but they don't like the idea of risk. So the idea of having a risk-free lottery where you can withdraw the money at any time without losing anything is a huge incentive. And then combining this with high-value cash prizes is something that many of us just can't avoid getting excited about. Because realistically, if you're offered a chance to win £1 million completely risk-free, who wouldn't want to take up that offer? Now, on the surface, this sounds like a great opportunity, but to actually determine whether or not it's a good place to put your money into, we need to look at the figures and the odds that they offer. So here's the prize breakdown from February 2021, and what this is showing is how many winners there are for each prize amount, as well as the odds and the likelihood you are to win per every £1 bond in a calendar month. So we can see, like I mentioned before, the prizes vary from £25 to £1 million. And as the prize values go up, there's a direct correlation between how many winners there are and the likelihood you are to win. So for example, your odds of winning £25 with one premium bond are 1 in 35,500. And there are almost 3 million people every calendar month winning this amount. Whereas that £1 million prize, your odds are 1 in 51 billion. And only 2 people a month are actually winning this amount. So from looking at these odds alone, I think you could definitely say they're not exactly in your favour, and it's not exactly an easy way to become a millionaire. But interestingly, you're actually more likely to win the National Lottery jackpot, where the odds are 1 in 45 million per week. But obviously it costs money to be entered, and even those odds aren't exactly brilliant. But what we were just looking at are the odds for every £1 worth of premium bond. So you might be thinking, what happens if you put more money into premium bonds, and will it increase your chances of winning that £1 million prize? So what this table is showing is what your chances are of winning that £1 million each year compared to how much money that you have held in premium bonds. So firstly, if you just had £100 in premium bonds, your odds increase from that 51 billion of having £1 worth to 42 million. And obviously by increasing the amount of money that you have in premium bonds directly correlates to the chances that you have of winning that £1 million. So if you hold a maximum of £50,000 in premium bonds, your chances of winning that £1 million increase massively to 1 in 84,000. Okay, so the next thing to look at is that advertised 1% average return that you could expect to get on your money. And can you actually expect this in reality? So if you think about it like this, if you put in £100, your chances of actually making 1% are virtually zero. based on the fact that the minimum prize is £25. So you'd actually be making 25% in returns on your money, which is 25 times more than what they're advertising. So this is incredibly unlikely. So in reality, your chances of making any return at all from having £100 worth of premium bonds are actually zero, and you're more likely to make no return at all. So now, understanding that concept, what happens if you add more money? So if we now look at the median average of people that actually hold premium bonds and how much money they have put in them compared to how much return they actually make, we can start to get an idea of whether or not there's an optimal amount of money to put in. So as an average person, if you have £1,000 in premium bonds, you could expect to make no return each year from your premium bonds. But then actually, if you increase your amount up to £10,000, the average return that you could expect to make is 0.75%. And then from there, the more money that you have put in increases the annual return that you could expect to get from your premium bonds. So if you have 25,000, you could expect to make 0.8% in return. And then up to £50,000, which is the maximum, you could expect to make 0.9% in return. So overall, what this shows is no matter how much money you have put in, you're still very unlikely to make that advertised 1% in return. And also, the amount of money that you have held in premium bonds massively correlates to the returns that you could expect to make. And statistically, if you have less than £1,000 to put in, it's probably not worth you bothering putting your money into premium bonds. But once you start scaling the amount of money that you have put in and getting closer to that maximum £50,000 is when it becomes actually more of a viable option. Okay, so that basically covers all of the figures we really need to look at to see in reality what sort of returns you could expect to make from premium bonds. But the thing to look at now is how these average returns compare to savings accounts out there at the moment. So like I said before, interest rates are basically at an all-time low, and you'll be stretched to find anything close to 1% with amounts over £1,000. Instant access accounts with amounts over this are usually capped at about 0.4%, and it's only once you start looking at fixed-term savings accounts where they become more comparable. So at the moment, you could get a 2-year fixed-term savings account with an interest rate of around 0.75%, and then moving up to a 5-year fixed-term account, you could expect to see 1.35% in return. So actually, you could say that the returns you get from these savings accounts are actually equivalent or potentially better than the returns that you would get from premium bonds. But obviously, you have to take into account that they are fixed-term savings accounts. So basically, you can't access that money for that period of time that you agreed to. Whereas with premium bonds, you're free to withdraw the money at any time. And it's also worth bearing in mind that you're never going to get rich from a 1% interest rate. However, with the premium bonds, despite it being a small chance, there is still a chance that you could be that lucky person that exceeds the average and wins that £1 million prize. So it's difficult to say whether or not it's better or worse than a savings account at the moment, but it really comes down to how much money you're prepared to put in and whether or not you need instant access. Now, the next thing to consider is inflation. So if you have money held in premium bonds and say you're making less than that 1% average return, your money might actually be losing value to inflation. So in 2020, the inflation rate was 0.9%. So if you had any money in that year that was sat in a savings account that was making less than 0.9% in return, that money was actually losing value. And it's exactly the same with premium bonds. So if you're making less than the average, the chances are you'll be losing money to inflation. So looking at the average returns we looked at earlier, you'd actually have to have £50,000 to be keeping up with the inflation rate of last year. The next thing to look at is the tax side of things, and whether or not it's actually a beneficial selling point that the prize money is tax-free. So for the average saver, the chances are you're not going to be paying tax on your savings anyway. Basic rate taxpayers are entitled to a £1,000 tax-free savings allowance each year. So for example, to actually be taxed on your savings, you need to have £100,000 earning over 1% in interest in a year. But because interest rates are so low at the moment, this isn't really a huge concern. So overall, the selling point of having these prizes being completely tax-free is only really sort of relevant to the minority winners that are actually winning those bigger prizes. Whereas if you're closer to the average, making less than 1% in return, it's not really going to have much benefit. Okay, so that basically covers everything that you need to know about premium bonds, how they work and how they compare to other savings options out there. But now I just want to quickly go over what I personally think about them and whether or not I'd be prepared to put my own money into premium bonds. So the simple answer is, at this moment in time, no. I wouldn't put my own money in premium bonds. I personally struggle to see that the benefits outweigh the limitations when taking a deeper look into the odds and the genuine average returns. But that being said, the way I structure my finances is a lot more risky than a lot of people would be prepared to do, where I don't have a single savings account due to the fact that the interest rates are so low, and the majority of my money is tied up in stock market investments, where I feel there's a huge amount of opportunity to make much higher returns. So I think one great example of a stock market investment could be the S&P 500. So the S&P 500 is a US index made up of the 500 largest trading US companies, and on average it generates between 8 and 10% a year in growth. But obviously this index is just a benchmark, so there's countless other opportunities where you can make much higher returns than this. But it does come at a risk, and there's no doubt that you could lose money on your investments. However, for me, I just feel quite comfortable with the risk and it doesn't bother me all that much. And I actually like the fact that you can take more ownership over investing by doing more research and finding winning stocks, rather than just leaving your returns down to complete chance. However, that being said, I could see my perspective changing a little bit if I'm at a later stage in my life looking for less risky opportunities. And I think if I was to put money in, I'd use it only as a diversified, safe investment. And based on the numbers, I don't think it'd be worth putting in anything less than £25,000. Now, if you're wondering whether or not it's the right place for you to put your money into, I think the real thing to consider is what your risk appetite is and how much money you actually have to put in. But there we have it. That basically covers everything for today, guys. I really hope you guys did find this one interesting and insightful in learning a bit more about premium bonds that might not always be clear on the surface. I also want to give full credit to Money Saving Expert for providing all the data for this video. And if you are interested in reading more about the statistics and the odds, I'll leave a link down below in the description to their website. But if you did make it this far, thank you so much for watching. And if you did enjoy the video or feel like you learned something new in any way, I'd really appreciate it if you could smash that like button, as it does really help me out with the YouTube algorithm and basically just allows YouTube to share these videos to more people that might find them useful or interesting. And as always, if you are new around here, make sure to hit that subscribe button down below and click that bell so you never miss a video, because this really is the place to be for all the most relevant information on UK finance. And as always, make sure to drop your thoughts down below in the comments as to what you think about premium bonds, because I'd really be interested to see. And if you do have any questions or feedback for me, I'll make sure to respond to all of you. But with that being said, take it easy, guys, and keep saving.